Welcome to this week's Fireside Chat with Jesse. I'm joined today by Arvind Cadambi, Vice President for Line Technology Finance. Thanks for joining me, Arvind.
Hey Jesse, yeah, thanks for having me on. I appreciate it.
It's great to have you on the program, man. It's been nice to get to know you, Albert, and George over the years, and look
Yeah,
forward to learning more about your story. For those who haven't had the privilege of meeting you yet, Arvind, do you mind just kind of introducing yourself and your career in equipment finance?
yeah, sure. I've been in the equipment finance space since 2006. So I got started right around almost 40, so when I was about 21, and fell into it. Just I think this is pretty much everybody's story in equipment finance. Mine's not too unique, by chance. I was coming out of UC Irvine, and at the time the mortgage crisis was happening. There wasn't a lot of jobs at the time, really, and I had some friends that were in the mortgage business, and I was originally selling title insurance for a little bit. And through that, I was involved in this like poker game. So with that, I met these guys that were in the equipment finance business. Their attorney actually was. Um, that he was in this game with me. That's how I met them. And he said, "Look, why don't you try this?" I said, "All right, awesome." So I got started with. They're still my friends today with the independent leasing company selling IT leases, and did that for oh gosh, like 13, 14 years.
Wow.
And I had never worked at a bank, and I sort of felt like I needed that experience. So I ended up leaving them and went to work for Macquarie equipment finance for a couple of years. And that was a really good experience because I got to see how they run the business and how they do things on a bigger scale. But I also realized that I didn't really enjoy working at a bank too much. I mean, it was a great experience. I had good people that I was working with, but that has its own set of challenges. And I
Sure.
was pretty entrepreneurial, albeit I was working for somebody else. It was really an eat what you kill type of opportunity. And um, I was developing my own business and I had my own customer base. And for a number of years, we were holding our own paper and I was spearheading a lot of that stuff. So I had the skill set to really kind of go back out on my own. And I met my partner Darren in actually on the other side of the transaction. So he was working on a pretty large deal with me and we became friends. And he wanted to just do something on his own as well, and how a lot of leasing companies start, I think, is he said, "Look, like I want to go and do this," and I said, "Well, I want to do that as well, and I'd love to join you." So we got started in 2019. I like to say I knew what I was really doing. Looking back on it, we're what 6 years in the business now. I don't think I think I probably sort of thought I knew what I was doing, and then now I'm sort of like, holy crap, like I'm now understanding what it means to actually develop a business. So we're in a good place now, but to give you a little bit of history on Lion, we are primarily vendor based, so we do a lot of still within our name, our IT leasing, IT software financing is our primary business. We got into construction a couple of years ago, so we do a lot of we call it infrastructure. So it's think anything that is getting built or building in the physical world is what we're working on. We originate primarily through the vendor channel, so we have a lot of programs in place. And when we started the business in 2019, things were kind of what you would expect with a startup. It was slow, but we were a significant beneficiary of COVID because a lot of our programs that we had, the manufacturers wanted to incentivize buying. So we had a lot of promotional products that were coming to play, and that really helped us accelerate our growth. And through those couple of years, we were able to start getting significant volume going and really start growing the business. And it's been fun. We've been adding to our team. We've been growing. We haven't grown too quickly, I would say. We're I think about a 10-man operation right now, and
Okay.
we've always been sort of conservative in our growth plans, and I think primarily it's because we realized what it takes to develop a leasing business, and now we're starting to kind of put all those pieces together. And it's been good. It's been fun to experiment and learn different things. And I think now we're at a place where okay, we're going to try to accelerate the growth now here in the next couple of years. So
Got it. And you're in California right now, but you have a Arizona office as well, right?
yeah. So one of the things getting started during really right before COVID,
I was gonna
is
say your timing between graduating just before the financial crisis and then starting up Lion just before
it's
the pandemic
yeah.
is like make sure whatever you do next, I know so I can
Yeah.
figure there's something on the horizon coming.
Exactly. Something major's happening. Yeah, something major's happening. Um, when we started, we had a small office in Los Angeles, and Albert and I were commuting from Orange County over there, and it was a very long drive. So within a couple of months, we decided to, have our LA office and get an office here in Orange County, which we did. And then COVID happened. So we were all working remote. So we had this remote sort of culture for a number of years.
Mm.
But then we realized that it's so hard to collaborate, and do things in this business remote. We still are very remote. A lot of our people do work from home. But we have this office here in Tustin where I'm at, and then we have another office in Scottsdale, which is that office is growing right now. So it's been good, but we still, I think, are always going to try to be a hybrid place where we're trying to really grow and do as much as we can with our goal is always to not grow headcount, right? Like we want to grow volume just like everybody else, but we're not always looking to add headcount nor physical space, right? That's our core.
And you don't need to either.
No,
There's
no.
especially with technology today's and everything
Yeah,
else, there's no reason you can't double or triple or quadruple what you currently do just by
exactly.
having the right processes in place. So absolutely.
Exactly.
And what's funny is you mentioned a poker game.
Yeah.
It's kind of how you fell in this industry. One of my neighbors, lives 2 houses down from me, had a poker night, and I ran into George there.
Oh, that's right. That's right. Yeah, he told me that. That's right. Yeah, yeah, yeah.
He's like, "Wait, that's the Jesse?" And I'm like,
Dude, like I was telling you before this call, you're everywhere. I see you everywhere,
"Yeah, I guess you just can't escape." And it was just kind of entertaining though, because I
man.
was trying to circle up with him for
Yeah,
coffee forever, but I'm on the road so much. It's just like
yeah,
Scottsdale's not that far away. It's only like a 40-minute drive, but it's also trying to squeeze it into anything else. You're just like,
yeah,
and then
yeah.
for Macquarie, did you ever get to go to Australia, the
No,
HQ?
I did not. I did have the opportunity, but there was a chance for me to go. So I came in at a pretty unique time, which I liked, appreciated. So what ended up happening was they were restarting they had started a new business line in Florida. And the guy that was running the place gave me the opportunity to kind of come in really when they had just started. They hadn't been even taking deals yet. So I got to see sort of how things were really started on the bank. So that was cool. That being said, I didn't get a chance to go to Australia primarily because we were in the process of like getting the volume going, and some of the people left or went. They gave me the opportunity. I said, no, I don't want to. I don't want to make it. Looking back on it, that was kind of a mistake. I should have gone, but yeah, um,
There'll be another time. I mean, take your
yeah,
time.
yeah, for sure.
Beautiful, beautiful country.
Yeah, it's on my list of places, 100%.
Yeah, because I think Macquarie tried to do some things, and I don't even know if they're still around in equipment finance or not. But I have a son that works
Yeah,
at
yeah,
Macquarie.
yeah. They're around. It's a little bit of a different business, but that original business that I was part of is not there anymore. But they're still alive and kicking. So
Got it, got it. So almost, I guess, 2 decades into equipment finance.
yeah.
I guess what is one of the draws that kind of keeps you in this industry, Arvind?
So I think at this point it's really for me personally, it's more about building a business around equipment finance, getting to learn our customers, understanding what are the pain points, and then addressing those. I started as a salesperson, right? So I think a lot of people, when they start a leasing business, they're either starting as a salesperson or an operational person. I think I'm fortunate that I have some backgrounds in both, and so I was able to really kind of get started from both perspectives. So at this point, what's really keeping me here and doing this is that I want to see how that I can build this business, um, and continue to grow it and to scale it, but then also understand that the business is always changing, right? So one of the things about equipment finance and leasing that I would say is you have to be very adaptable to change, right? So there's always things that are markets are changing, your customers changing, your pairs using. So that's exciting for me. You're always trying to figure out new things and new strategies of what's going on, because if you anchor too much to the past, a lot of the times, like you see, like that playbook is not going to work anymore, right? So it's a lot about trying to see what else can be done. I mean, there's certain things that are always going to be there, right? Like that you got to play by those rules. But a lot of times, like you have to be changing, because if you still run that same old marketing strategy that the guy did 10 years ago, or the same old, credit strategy that the guy did a long time ago, and all that kind of stuff, like that's not going to work. And now with the technology, what's happening, it's accelerating all of that. Because I think a lot of people could have got away with it for a number of years, right? Like there's a lot of things that people were doing where, they could still stick with the old school way of doing things. A lot of that's changing now. You can't, like, you have to use technology. You got to use, some of the tools that you and I have collaborated on, to get your company to the next level. And that's very exciting for me.
Yeah, and especially with the amount of private money that's kind of entering the
Yeah.
middle marketplace where you're at, right? If you don't have that differentiator with your process, I mean, you have it because you're your experience, you know how the sausage is made, you know how to tell that story.
Right.
But with all the people kind of going at that middle ticket marketplace, you're just kind of like need some
Yeah.
differentiators.
Yeah. And that's the thing. It's, and we're really in two areas. We do the middle ticket. We also do, small ticket vendor programs. So that's a big part of our business. And
Sure.
the small ticket space too, I've seen that's changed a lot, right? So like, and I think small ticket, and these words are, there's no hard definition on any of this stuff, right? Like you could talk to me, and I'll call my bills middle
I mean,
ticket.
people think small ticket and it's like 10 grand. It's like, no, that's micro ticket. But then I hear
Right,
small
right.
ticket and I hear like 2 million. I'm like, whoa, please.
Yeah, yeah,
Like,
yeah. Everybody's
like,
got a different take on it, right? You talk to one guy, he's going to say one thing. You talk to another guy, he's going to say something else. So I would say what we really try to do is, with the vendor side of the business, our goal has always been to bring in vendor programs that are very repeatable, right? And that we can understand, we can add value, and we can compete in our space, in our lane. And why I say that is because, we can't really compete with the banks, right? But we work with the banks, and that's just how. So we realize that and where our value proposition can really be. But that being said, we have some good programs that we can then still get access to some good capital, and we can present that to the right people. So, it just depends on kind of what game we're playing, but we have multiple sort of channels, right? So we're doing the vendor business. We also work in the middle ticket, as well. So it's just
no,
depends.
it's big. And I could think of some banks that probably when they think of like IT or technology stuff, they're like, oof, we don't know if we really want those assets on our books. And if it's something you guys can take some of that off of them, I'm sure that's a big competitive advantage too, right?
Well, that, and also, we do a lot of software financing here, right? So
Which is another one of those things where
yeah,
it's like, how do we like there's not a lot of residuals on
exactly.
software.
Yeah, and that's a big part of our business is
Sure.
software financing, and that's really what we still do a lot of today. Um, what we find obviously with software financing, obviously the credit has to be there and everything, but the types of software that we do and the types of customers that we have, um, are it's really mission critical, and it's also people that tend to really have good credit quality in the first place. So it's like that's where we focus in, right? So
Sure.
um,
And that's big for small businesses too. So you don't have the
yeah.
outlay all that. cash up front for a mission critical program.
Sure. And a lot of our credits are even in that space, it's everything from your small 5 to 10 man operation to like extremely large enterprises. We've done them all, right? Every single sort of company needs financing. And arguably what I've come to find have to doing this for so many years is the bigger the companies, the more financing that they potentially will use. So
Sure, sure. You just need to get that one project to show them what you guys are capable of doing, and then it kind of steamrolls from there. So
yeah. And we've also found that in the middle market, working on those transactions, there's different areas that are underserved and probably at this point overserved. Uh, we are now targeting into an area that we think is going to be a good area, which is really that kind of a lower middle market.
yeah,
And it's also a fun area because you get very sophisticated operators that you can speak intelligently about figuring out a solution that's going to work for them. I was just on a call today, talking to one of these type of deals, and it's a lot of fun to kind of put that together and see where they're coming at it from, right? Like, what are their objectives? How are you going to structure this deal to make it work for them? Because their motivations, you have to really understand that it's not always about like what's my interest rate or et cetera. Like it's a lot of it's like functionally how is this put together, where that differs a lot from our vendor business, right? Where the vendor business is very different, right? We're not the pain points there is not addressing the company's growth plans. The pain point there is really can we be a low touch, frictionless provider for the vendor? So it's really two different businesses that we operate here.
no, it's fantastic, Arvind. And so how are you seeing now that we're almost at the halfway? Well, I guess we are at the halfway point. A
Yeah.
couple weeks past the halfway point of this year. What are you kind of seeing in the market? Like, still seeing a decent trajectory? Or I guess one other question I have is all these data centers that are going up. Like,
Uh,
do you guys get to play with that at all? Like, do you guys have a hat in the fight with that?
so not directly. Indirectly we do, especially through our construction focus.
Uh,
So there's some areas that we target that there's play there, right? Some of our customers are benefiting from that boom, and that's the way that we play it. But we haven't directly done any sort of data center deals yet here.
got, got it. And then as far as like, how are you seeing the rest of this year kind of play itself out? Like, as far as like how it started based on what you guys forecasted, I mean, it's pretty much on target. I know
It's
some of these geopolitical things don't freaking help, but
yeah. So the feedback that we got from a lot of our vendors have been tariffs have really affected them. Last year our numbers were down in the first part of the year.
uh,
They picked up in the second part of the year. This year they're starting to come around and I mean, we think we're gonna definitely exceed last year's numbers. And we're seeing some meaningful upside. I would say there's still a lot of tension with some of our vendors that are selling new equipment. There's a lot of issues with tariffs. Affordability is a problem for a lot of the customers, especially in the small ticket space. Um, and then also, that being said, the uh, timelines for delivery, right? So like it used to be a lot of this equipment can get into place within a few weeks, there's maybe 1 or 2 months. I mean, we see a lot of stuff that goes out now, 3, 4, 5 or more months, So
and what issue
that,
happens between the time of signing to the time of delivery,
yeah,
and then hopefully there's no interest rate changes or
right,
anything else that impacts
right.
what the agreed upon price was, what the delivery price is. That's always
Yeah, and that's become an issue too, right? Like,
Mhm.
there's that, and then we'll see what happens with rates. But right now it's not too bad, right? It's not like I forgot what year it was, but there was maybe in 24, where the rates went up significantly in one year. That was challenging, right? Because we had a lot of issues at that point. So, it's but you learn again, like I was telling you about, like I thought I knew what I was saying in 2019 when we started, and now it's like, wait a second, well, I didn't know that rates started going up that can go up that fast or drop this quickly. Like that's something new.
Well, yeah, and to your defense, right? I mean, you got in just at a turbulent time,
Yeah,
but from 2008 to 2000, what, 21, 22, all it went was this way,
that's
right?
right.
I mean, that was it. And this
Yeah,
is kind of like the first correction that
Yeah,
you're saying. And now I think we're just in like this little,
yeah, yeah.
whatever roller coaster thing that's small.
Oh yeah, I'm curious to get your take on that. I mean, you talk to so many different companies out there. Um, do you see that there's an oversaturation in the market? There's just a lot of people, or do you think there's gonna be a turn down here soon?
I mean, I think consolidation's real.
Yeah.
I think we've seen it. I mean, we just had another small ticket company that was acquired last week that was a decent size.
Uh-huh.
And I think there's going to be more consolidation.
Yeah.
I'm kind of curious to see where some of this more insurance type players, that are getting into equipment finance because it's more of just a, steady increase, but
Yeah.
it's not going to have like the huge increases that they might be getting with other portfolios. So
Mhm.
I'll be curious to see as they get into this industry, after 3 to 5 years, if it's something they want to continue.
Yeah.
Because equipment finance is kind of slow and steady, right? It's just a reasonable return over a period of time. And I think that's why we're such a resilient industry because you're going
Right.
to have some operators that come in and they do some really creative stuff and
Yeah.
it's going to work out for them or are they going to get burned?
Right.
You never know.
You never
But
know. Yeah.
I think overall, when the sentiment that I get is just we're very resilient. I think some of the banks are getting back into, they're slowly starting to, get back into it. Are they going to be all in? I'm not saying that. I thought they would kind of jump back in just to kind of protect some of the ground that they've been losing, since what was that, 2 years ago, 2.5 years ago,
Yeah.
that
Yep.
whole bank issues with Silicon Valley and so on and so forth. But I
Right.
mean,
Yeah.
overall, I mean, people are seeming to be in a similar situation with you, right? Where it's like the year started off a little bit like, okay, this is going, and then I think there's just been, these political things that have been happening, right?
Right. Right.
I think some of that, hopefully, I think some of that was resolved today, but who knows, right?
Yeah, I mean, I always like to think, look, in our business and in any of these businesses, we got to make our own economy, right? Like you just gotta,
You hit the nail on the head. You can blame other people, but if you're
yeah,
not sitting there trying to figure out a way where you're a business owner, right? You're an entrepreneur, where it's
yeah,
like, okay, you can only hedge so much, but you can sit there and blame other people all day long. But it's
that's
okay.
right.
Here's the circumstances. Here's what I can figure out. I'm gonna go
Yeah.
get it regardless.
Oh, exactly. That's all you could do, right? You just keep going. I mean, I remember when I started and there was the downturn, right? Like a lot of our funding sources had dried up at that point. They just had gone out of business, right? In 2000, like 9, 10, right? And so what we did is, we decided, hey, maybe it's time to start our own balance sheet. And that was 2011, right? So um, we started our own balance sheet business. We started balance sheeting deals back then. And we did that, until I was with them and then I left this my old firm. And they still balance sheet quite a bit of business. And it's like that's what you have to do is you guys start figuring out, okay, well, where's the opportunity, right? All the funding sources dried up, and now it's time to get more involved, understand the balance sheet side of the business, which I think that's what we're trying to figure out here too. It's like, and I think I've talked about this before. It's like, if you're running pure syndication brokerage, that's a tough business to really be in, so
It's tough, man, because it's all about quick gains,
yeah,
right?
yeah,
Which are fine, right? I mean,
yeah,
it's fun because you get that and it's like, okay, I just sold this deal. This is how much money I'm going to make in the next 2 months. Rock
right,
and roll. But when you get a balance sheet, it's like it's hard for the first couple of years because you have to wait until some of these things keep
right,
going through the cycle. And
right,
uh, I think I'm also seeing more organizations that were traditional, like they would sell off like maybe 60%, 70%. A lot of their funding sources aren't, the rigidity of credit and everything. They're just drying up. So they're losing good deals.
mhm,
That they're like, wow, I just lost that deal to this other independent because they took it on themselves.
right,
So it's like, let's grow my balance sheet. Let's figure out a way where I can get a
yeah,
line
yeah,
because now it's like they see where it's like, I got C pricing for what I think is an A deal.
yeah.
Like, let's rock and roll.
Yeah, yeah, no, exactly. And that's what happened to us in 2011. It's like we knew that there was a good opportunity to good companies that needed lease financing, and that's what we were able to provide them back in 11. And that was a great time to get started with a portfolio.
Mhm.
And we're seeing that now again too. We're seeing the opportunity to be more bespoke with our documentation. And that's another thing that we're seeing a lot of stuff where it's like we're starting to do deals here where, structuring makes a bigger difference, documentation makes a bigger difference. And if you can do that, you need to start using kind of your own balance sheet to really put those deals to play, right? It's hard to come up with a clear structure, do it, and then, hey, go talk to a bank or a credit fund or whatever. You can do that later, but in the timing of the deal, it needs to be done, quickly. So
Sure. No, absolutely, Arvind. Makes complete sense. And then I guess my question I have for you is I think our paths probably crossed at I don't even know if it was an ELFA event or an EFA
uh,
event. Just wanted to
uh,
talk about the kind of trade associations and how they've supported Lion throughout your 7 years in business.
yeah, yeah. I think they've been pretty instrumental in our growth. So the both associations, I think, have a significant amount of value. It depends on kind of how you approach it. I would say what I've come to find is you have to be very present and active in the organizations. Going to sometimes, like for me, sometimes I put my sales hat on. I'm like, wait a second, do I really want to go to this thing right now? Like, I'm not going to make anything. There's nothing going on here. But
Yeah.
that's how you make relationships, and that's how you meet people in the industry, and that's how you learn. And we've gotten a lot out of it, right? So we now, I mean, we take a good contingency of our people here. We're small organization, so we're underwriting all this ourselves, right? Like we take a good amount of our people to the NIFA events, to the ELFA events, right? So we go to all of them, we set the meetings, we network, right? We're out there. And I think we've gotten to learn a lot about the industry. It's accelerated our growth because we now are starting to talk to people that can help us in a lot of different ways.
Yeah.
We can help them too, right? There's a lot of things, there's a lot of this industry is great in the sense that people trade ideas all the time and they're always collaborating on different things. So um, the associations have been very valuable to facilitate that. And so, yeah, I'm really grateful for doing that and being a part of it now.
That's great. And it's when you have those game time business decisions and you remember that handshake or that conversation that you had with somebody, I think that allows these things to be a lot easier than it is kind of going in cold when you haven't invested the time. Because yeah, I mean, like you said,
Yeah,
you're underwriting it. That's more like an investment in building
that's
these
what we look at it.
relationships. So when, okay, who is the funder that can help me out with this deal? And it's okay, yeah, I remember him. Yeah.
Yeah, that's the way we look at it. We look at it from we're gonna expand everybody's networks in our organization, and through osmosis that's going to help us, and that's how we do it. And I would say too, I think the associations, because I wasn't very active in them for a number of years, it feels like there's more people now active in these things, and it's kind of the place to be. You're doing um these podcasts, people are posting on LinkedIn more. You see more about what's going on in the industry, whereas before it was way more opaque, right? Like you didn't really know what was going on, and people didn't really know each other. So it's a lot different now. I think you have to kind of be out there a lot more. So
Yeah. Yeah. Unfortunately, in today's,
yeah,
uh,
yeah.
yeah.
Unfortunately,
Now,
fortunately, it depends
as far as you seeing me on a TikTok, like, come on, that's kind of where I draw the line a little bit.
you're not on there yet.
I mean, I have an account, but it's more
Yeah,
of just only so much time in the day, man. And it's like,
yeah, no, I
like,
think.
like I enjoy doing these things, but it's more just for having casual conversations, talking
Yeah,
about,
yeah,
people's careers and your entrepreneurial spirit. Like, I'm not
yeah.
sitting there like, yeah, let's do a dance or something like that.
Right, right, right.
Yeah.
Yeah. No, I get it. I get it. Yeah, no, social media, I mean, it's powerful if you can use it right for business for sure. So
Yeah. Yeah. I mean, oh no, absolutely. It's just like, holy cow, I can't imagine trying to figure out what that looks like. Like I'm kind of good right now. I'm good. I'm good.
yeah, yeah.
Tackle that other business there. But I ask everyone, Arvind, who comes on the program to give me a fun fact about themselves. So what do you enjoy doing outside of work?
Uh, George, okay. Well, I'm a fitness enthusiast. So I would say,
Huh?
I don't want to say athlete, but fitness enthusiast. So I have even like two of these wearables on my hand right now, right? I got the Garmin watch on one and I got the Whoop on the other. So I would like to think I'm not a optimizer, but maybe I am, I guess. So I'm really into fitness. We actually think our whole office really is really into it. So we have this culture here. We all go to the gym. Everybody's talking about what workouts they do and everything. So very into that. Very into to golf too. I got back into golf recently, so
Huh?
I'm sort of obsessed with that at the moment.
It's a fun game, frustrating game, but
It's
fun.
it's so
But fun.
fun. Yeah, it's so fun. And I always there's so much like philosophy in golf. Like we can talk about this for so a long time, but just playing shots, having to like deal with all the circumstances. Yeah, it's so addictive. I love it.
Yeah, yeah. I just remember it's like I play maybe 8 times a year, and typically
Yeah,
I only play for work because I'm.
yeah, yeah.
So I played more outside of Arizona than in Arizona, which makes no sense.
And you live in
But
like the golf mecca. I mean, you have everything there. Yeah.
yeah, I haven't played yet this year in Arizona. But it's
Yeah,
just
yeah,
too much time and kids and blah blah blah. But you
yeah.
sit there and it's like I think I started off my last golf round. I went uh par birdie, and then I was just like, you know what, I'm out. I should just leave.
Dude,
Only gonna get worse from here.
yeah,
And then it's like,
yeah,
it was the hit and the drive. Every shot was in position A. Then it's like you call that.
yeah, yeah. No, I mean, I know what you mean. Yeah, I'm like that too. I'm streaky. I can go play beautiful couple holes and then blow up. So
Yeah, yeah. Well, that's why I like the game. I don't love the game because it's
yeah,
just,
yeah.
hey,
Well,
but you're outside with buddies and you're having some drinks and just enjoying. So
exactly. And that's the whole point of it. Yeah, that's the whole point. And like I love that experience of going, early in the morning, like waking up, doing that whole thing, the whole ritual of golf.
well, Arvin, great having you on the program today, man. Thanks again for sharing your story and congrats on the success of Line Technology Finance to date. Look forward to seeing what you, George, Darren, and Albert do with the team in the future, and look forward to seeing you at upcoming event.
Yeah, absolutely. Jesse, thanks for having me on. I appreciate it. And we look forward to seeing you and seeing your business grow as well.
All right. Thanks for your time, man. Thank you.
Thank you. Take care.
Thanks.